Happy Monday, everybody. Welcome to the closing beat. How's it going out there? This is a quick stock market show that we do. We call it Closing Beat. I'm Dustin Tibbetts, financial advisor with Jazz Wealth Managers, and we're going to go over the stock market and tell you how things went today. We'll go over some of the good stuff, the bad stuff, and, well, lately there's been some ugly stuff we've had to talk about, but we'll cover that as well. Hey, we're playing a game. It's called Guess the Dow. If you'd like to earn $100 extra, all you got to do is be the closest guess without going over, like our winner Chris H. last week, who was closest to guessing the Dow, the closing price of the Dow without going over. And so a $100 gift card on the way there. So hope you play along. No strings attached. You can do that. Your jazz artist of the week is George Duke. You ever heard of George Duke? Amazing piano player. I don't mean to like go back to back with the piano players. This guy's a little bit more, I don't know, interesting, taking a sort of expanding on Mr. Oscar Peterson there. He's got a song, it's called It's On, and if you get a chance, listen to the Jazz Festival in Indonesia, 2010. So you're looking for like George Duke, It's On 2010. George Duke Trio there did a great job. Anyways, that's your jazz artist of the week. We'll cover more of those. Let's talk about the stock market today. You got 136 points down on the Dow, not too bad. You got 67 on the S&P, and the NASDAQ was essentially positive. I mean, it was basically a positive day there. And for part of the day, it was actually positive. After hours, I believe, it's positive as well, just by a little bit. You got a wild night overnight. I just love watching the markets overnight there. The Fed basically announced unlimited quantitative easing. They did it. Remember, they haven't done that since 1987 there, when they said they do whatever it takes. Well, they did it again. Unlimited quantitative easing there. They're going to buy $375 billion in treasuries just this week, by the way, in addition to the $1 trillion in the repo market, $250 billion in mortgage securities, and a whole bunch more in mortgage-backed securities. Basically just throwing out a bunch of numbers out there to let you know they're going to do whatever it takes to make this economy stay healthy, or try to stop it from collapsing, I should say. But the stock market doesn't care. Let's go over to the stocks here. We'll look at the S&P 500. We made new lows today, just a little bit. Well, a little bit is relative, I guess, compared to how we've been falling. Stock market falls a little bit because it's still waiting on one of two things, and I've already told you what those two things are. I've been saying it for a week now. We need a stimulus plan of over $1 trillion. In fact, in our Notes from Jazz email this weekend, I laid it out exactly step by step what would happen if we did not get this, how you're likely to experience the downturn in the economy, and I just tried to stay one step ahead of everybody, in addition to a lot of good stuff there. But we said, look, we need stimulus, right? And it needs to be a meaningful stimulus package, or we need to see, the second thing was a reduction in the number of new cases out there, and I think we're going to get the stimulus plan first. However, today we were not able to agree on it. Twice they tried to do something, and they couldn't get it done. The Democrats seem to be holding back for a different set of stipulations in the plan and what the Treasury can and can't do. It's not really exciting stuff, but the bottom line is they couldn't agree. And because of that, you have a stock market that was higher on the Fed announcement. It was higher on the prospect of them having a new stimulus deal, the Congress, by the way. And when we found out that deal wasn't going to happen, we started selling off. When we found out the second deal wasn't going to happen, we started selling off. And then there was starting to be rumors of Friday. And so the stock market finished down. Well, the S&P finished down there. So maybe it's that the Congress men and women just need to get their trades in before they announce the deal or say something there, huh? There's a little low blow to that group of individuals in Congress that decided to trade on inside information, and it's legal. Anyways, in the stock market today, the NASDAQ and the Russell 2000 did outperform the S&P 500. NASDAQ, like I said, was positive for a good portion of the day there. The Dow was the weaker area of the group on the day. It was got a little bounce because of Boeing, but we'll talk about that in a little bit as well. For the S&P 500, you now got 34% off of the highs there. If you're looking at these prior highs, wondering how bad it's gotten, we're at 34%. We were at 35, just over 35 when we hit the lows today. Last week was one of the worst weeks in terms of performance-wise, 12.8% for the S&P 500, worst week since 2008. That's kind of crazy. And I spent all weekend working, answering emails, helping people, but it's sort of interesting when you look at what's happened. Look at this drop. We know it's the sharpest in history. It's the fastest that we've ever fallen over 25%. So you kind of like, I get it that you're either excited to buy this or you're emotional because the value of your accounts has fallen. But we can't lose sight that man, we're like watching history unfold right here. That part's kind of exciting there. 30% decline in 20 trading days. That is officially worse than 2008, 1987, 2002. You got to go all the way back to the Great Depression to find a decline that happened as fast as what you're seeing there. The Great Depression, guys. That's how cool this is to, to watch and be a part of. Tax filing day, by the way, extended to July 15th, right? So April 15th is normally tax filing day, going out to July 15th. But the big but here is that doesn't change your IRA and Roth IRA contributions. They have not changed that. They did not change that last time. You still have until April 15th to hit the max for 2019 in your IRA or your Roth IRA. So just keep that in mind. Wah, wah. Let's look at the different stocks here in the S&P. Some of your stronger stocks today are going to be Carnival Cruise Lines. They did secure $2.2 billion in a credit line there. Royal Caribbean did draw from their $2.2 billion line of credit. That stock was up 18% today. It was halted on the news on the way up. You're seeing a lot of this. I'm trying to point this out, though. Under the surface, there's a little bit of buying going on in a frenzied way, and I want to talk about that when we get to the sectors as well. Hasbro was higher on the day, 12% higher on the day. They told Bloomberg or CNBC, wherever I saw it, their China manufacturing is almost 100% up to almost up to speed, and sales remain strong for them. So the stock got a nice little boost out there. It wasn't one that we've been looking at recently, so kind of interesting to see a new name. On the downside, you've got your second-tier retailers. You got Macy's down 20% on the day. They have officially suspended their dividend. Then analysts basically lowered the price targets around the $5 to $6 range is where I saw a lot of the analyst targets being dropped today. No more dividend on Macy's. Kohl's down 17% on the day. Got a credit rating downgrade for them. That's new lows, by the way, with the 17%. Nasty. And they're, I believe, 50% of their stores are now closed, and probably more after today, because I saw a lot of different states starting to shut down there. Anyways, the Gap down 13% on the day. Bank of America says it's worth $6 a share in the next 12 months. It's essentially where it's at right now, but that's what you have going on right there. Okay, let's look at the sectors here. This is the interesting story today. So sector-wise, it wasn't a bloodbath. And what we've been seeing is on these down days, it's a bloodbath. Everywhere is just down. There's nothing you can do about it. There's nowhere to hide. We're just down. We're not seeing that anymore. Remember the last couple of days, I've been kind of saying, hey, look over here. Look what's going on. And you know what it takes to get the markets to rally. Now, you are seeing positioning where people know where they need to be, so when the market rallies, they get the most of it. One of them is in semiconductors. That was up 3.5% today. Out of nowhere, with no real news. Intel was higher. There was a couple other chip stocks in there that look really good today. And so people know they have to be over here. You know you have to be in that sector. Tech stocks today. Look, tech stocks held up. It wasn't even down 1% on the day. Made new lows. People said, that's it. I got to be a part of this. There's going to be a stimulus bill. It's just a matter of when. And they knew they needed to be in that area. They chose not to go with financials. There you go. They chose not to go with financials because the banks, the larger banks, your Goldman Sachs, things like that. Actually, Goldman Sachs is a good one to talk about. Goldman Sachs had to put up $1 billion of their own dollars into their own money market funds to kind of avoid that sort of drawdown. And so banks are not the most ideal place to be. People know that. You still need the banks to get the markets to bounce. But you did see that today. It was just kind of cool to see people moving into these different spaces, trying to be a part of it. If we go back to the semiconductors real quick, in semiconductors, Intel up 8% on the day. They are going through a whole bunch of stuff. They're offering $8.8 billion in new senior notes. The S&P gave it an A rating, so that one was strong today. I believe that was the news on that one. Hope I get this stuff right. Microchip, 10% higher on the day. Something similar. They're working out a deal to convert some of their notes into shares and be able to have that extra, less debt in exchange for a small payment. And so you got 10% gain on Microchip. And so in that space, that sort of helped things moving on. What didn't get help today, REITs. Wow. I mean, what you're looking at on the screen, if you've never seen this before, it's because that doesn't normally happen. You see with the thing, it's going down like that, real sharp. That doesn't normally happen, especially in this sector. It will be at least a decade before you see the same thing happen again. Maybe even longer. I mean, that's so cool to see. Not if you're holding it, but you got 5% down on REITs today. Now down 41% if you're looking at that sector. We talked about financials. That did hit new lows there. We talked about Goldman Sachs. PNC Bank hit new 52-week lows, lost 10% on the day. U.S. Bank also losing, well, a little more, 11% on the day. Just really nasty there. And Bank of America had an 8% down day as well, hitting new 52-week lows. There's a lot of weakness in the bank stocks there, but you got to have them. You got to have bank stocks if you want the markets to rally. So when the markets bounce, what do you think is going to go with it? I hope I've said that enough times. I've had some calls here over the last couple of days. I know I'm getting through. All right, healthcare. So you got 5% decline, new lows on that one as well. Really, this was pretty nasty. Johnson & Johnson, new lows, 7.3%. You don't always see that. Now, Abbott Labs, you can see some volatility. This one I can understand being down about 7%. Just crazy. Oops, that's not the right one there. There we go. Nope. Why isn't this working here? There we go. Anthem. What did I type before? Something else. Anyways, that one down 8%. You can understand volatility here. Johnson & Johnson seeing that volatility? I don't really understand that too much. Gold miners today up 6% on the day. Volatile area to be a part of. Gold actually finished up 5% on the day. People just trying to buy that bounce. But, I mean, if you bought gold when the markets were falling, you're maybe break even, maybe a little bit better. Wild one there. And in fact, let's take a look at the price of gold versus silver through this little crisis here that we've got going on. What I did is I didn't even have time to make it pretty. I just wanted to put this together for you. The price of gold and silver since February 19th, which is the agreed upon day of the start of this coronavirus mess. And so here's the price of gold and silver. You can see the price of silver has been absolutely bludgeoned to death. Basically a 30% down day, gold down 3.6%. Just kind of showing there's no real area to hide here in this market if you were looking to hide in gold or silver. Not gonna happen there. It's not looking good. Let's go over to communication services. They held their own today, I thought. Up about 0.5% on the day. That's going to be Netflix. Everybody's sitting around watching Netflix over the weekend there. All I heard on the radio this weekend was people talking about this. 8.25% to the upside there. It was also upgraded at Baird. Got a couple other upgrades in there, I believe. ATVI did well at the gaming space here, 8.49%. And EA Sports up 9, well, let's call it 10%. Let's see. Take-Two up 9%. Yeah, there you go. Hey, that's you. That's the one from our stock madness there. So looking good with Take-Two. And if you take Netflix and you take EA and you take ATVI, add them all up, that's 15% of the XLC. Which is working on loading its way up there. So that's part of the reason for that today. If we look at the S&P 500, 2% of the S&P above the 50-day moving average. That's 8 stocks. We've been hovering right in that range, 2 to 4%. Not a whole lot going around there. No new 52-week highs today. None, actually. And you had 220 new lows. That's not a record, but it does sound like a lot. I'll give you that. We've already covered some of the names there. Macy's, Kohl's, Gap, all were the ones that led to the downside. Con Edison, by the way. Fascinating. Check this out. Con Edison down 10% on the day, now down over 30% overall there since those highs. We go back there. That stock does not do that. That is probably 40 to 45 times more volatile than it normally is, and I'm not joking. You've got Advanced Auto Parts there. Hitting new lows, came off the lows. Looking pretty good there. Always makes you want to check the rest of them. O'Reilly Auto Parts did the exact same thing, came off the lows there. And Mohawk was another one. Oh, no. Mohawk was one of those stocks that came off the lows as well after hitting new 52-week lows. So not too bad there. The New York Stock Exchange, all electronic today, and it went well. I thought everything went pretty good. There was no issues there. Cover a few stocks. You got Boeing, 11% higher today. They got rid of their dividend. They're not going to pay their CEO. They're hoping to make themselves look a little prettier when they go asking the government for money. They want $60 billion. You've got Best Buy, well, pretty much flat on the day. We call it sad that we call 1.8% flat on the day, but it was flat. They got rid of their guidance, and they've seen a strong demand, obviously, in the work-from-home products, your webcams, computers, things like that, but they did withdraw their guidance. You had CVS and I believe Dollar General both say they're each going to hire 50,000 people. It was Dollar General. Each going to hire 50,000 people because of this. And then back to the negative news, John Deere, getting rid of their guidance going forward as well. I'll take a chance here and try to answer some of your questions, but a lot of the same old out there with a lot of quiet movement into different areas of the market that are trying to, people trying to position to be a part of the rally. I think you are hinting at this area where you're going to see a rally, so we'll see what happens. Yeah. Got to play with Al Jarreau. I actually got to play with Al Jarreau. I got to play the drums one night, and that was pretty cool. I didn't know him as well. I didn't know him personally, but I also didn't know of him as much as I do now. But yeah, that was a very interesting night for me. Yeah, I would agree. Cool. Zappa. That's cool. I love it. What else do we... Oh, hey, we have Carnival reporting earnings tomorrow. Let me see. Make sure I get this right. Carnival is reporting earnings before the open tomorrow, and you got Nike reporting after the close. That's going to be interesting. Dividends, Lam Research, $1.15, Altria, 84 cents, and Seagate, 65 cents on that. Yep. Oh, yeah. Did you get Roku a little higher? Those streaming guys have been doing well. Yeah, I don't look at this one enough. Up 17% on the day. Yeah, that's your streamers, your Netflix and Roku, of course. You gotcha. Oh, yeah. I like it. You've got some spec plays there. I can't blame anybody for wanting to take a shot on some stuff. Just be careful. I went through, in our Notes from Jazz email this weekend, I went through, right? This could happen. This is what could happen next. And so don't be investing your savings and stuff. That's tough, So we'll see. Twitter withdrawing guidance for the year. We'll miss the quarter. Is this telling for social media stocks? I think it's just an opportunity, really. If you're a company that has the opportunity not to stress about giving guidance or forecasting guidance or anything, it's just one less thing you have to think of. I would do it. I mean, honestly, if I was a public company, I would just say, we're getting rid of guidance for right now. We don't even want to go there. We don't want to have our analyst meetings. We don't have time for all this. We're just trying to navigate, the rough waters. I can understand that. So, no, I don't think it's any sign of anything for the social media stocks at all. And I like the volatility there. Yeah. Any thoughts on buying penny stocks? And I don't know. I don't look at penny stocks. No, mostly those are too tough. Don't like to look at those. Yep. What's your go-to stock to buy now? It's actually pretty good timing. We're doing something called Stock Madness. You could see the premiere video on YouTube where we're actually pitting different stocks against each other. And we didn't just randomly pick stocks. We actually had a little fun trying to see which ones we'd want to pick so that we could create a bit of a competition out of it. So if you want to check that out, you'll get to see some of the more interesting picks that I had and why I had those picks without actually making suggestions. I got to answer a question from Dustin, man. If another Dustin's asking. You talk about the risk with inverse ETFs. Ever done a video about them? I did a class, I believe, for customers. And the risk that I'm talking about is the cost, right? The drag. I believe I did. I look up, search leveraged ETFs on our channel. I don't know how good the search is in there, but I believe I did. And my issue with that is the leveraged ETFs is the cost, right? It's, they're exciting and they look like they're amazing right now, but for the 6 months prior to what we had, the February time period, it's a mess. It just costs you too much. I would rather take just a standard ETF and just buy twice as many, right? So you don't have to pay the drag. It sounds simple, but people like the leverage stuff. Yeah. What's a good minimum to enter the market this time, and how much percentage of the cash to keep on the side? Well, I don't know that I have a way to tell you what a minimum is. That's like saying how many bench presses should one do to achieve some goal. It depends on who you are, size, how big you are and everything, where you're starting. Yeah. Oh, Finn really wants to invest in American companies, but you're Canadian. With the exchange this way, I'm a little hesitant to buy. Do you think it's worth... well, as a Canadian, you can invest in the U.S. I'm not sure what you mean about with the exchange the way it is, if you're talking about the rate. That's an issue, but you certainly can buy. It's just you can't do like a retirement account, right? Because you're getting a tax advantage. Or you wouldn't get it, but that's the reason why you can't do it. Yeah. Yeah, there you go. That's a good answer there. Everyone has different personal finances, so it's really tough to give a minimum. That'd be something to be more specific about. I like it. I like it. Oh, on Wednesday's video, I actually went through, Wednesday's video that goes out this Wednesday, we talk about probabilities of things going to zero, going to $5, Uber going bankrupt, things like that, and actually quantifying it, right? Rather than just saying, well, I think there's an X% chance. So what I was trying to do was actually show you guys that you can stress test your portfolio. You can obviously stress test a stock and stuff. I think I'm going to expand on that, but we'll see what you guys think on that. Yep. You got it. I love it. Let me make sure I went over everything because I feel like I kind of went through it. Oh, initial jobless claims this week, Thursday, I believe. That's going to be a number. You want to see a chart that's about to go from la-di-da to holy cow, what just happened. I'll share it with you when we see it, but yeah, I think we're going to see a huge spike in that one. It's already priced in, but we'll see what happens. We will see. I think the Fed would actually welcome inflation here, and that's why they can be so aggressive and they don't have much of a concern for this. The inflation is way lower than what they were hoping for and have been hoping for. So maybe this is a side benefit. I don't know. And we'll see. Hey, I'm going to wrap it up there, get back to work. We got a lot to do here. I'll be back tomorrow, of course, to do this all over again. And I hope you enjoy. Thanks for watching. Appreciate you coming by here. And we will see you again tomorrow with all the good stuff. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.